Let me also welcome in Shiv Puri now. He's also joining us on the show, founder and MD at TVF Capital Advisors. Shiv, great to have you with us. Now, we've seen a fantastic run over the last quarter, unbelievably, in terms of how markets have performed. Share with us first the top trends, according to you, what you're really eyeing as we head into the following quarter, and one that continues to be perhaps more uncertain than when we first saw the pandemic hit us.
Yeah, well, good to be back. I think the first distinction that the market is making is which are the businesses that are COVID impacted and which businesses are lockdown impacted. And there's a big distinction in that. There are certain businesses where, coming back, for example, a movie theater, that's going to be very difficult to come back anytime in the near future. But a company selling a consumer durable or an automotive vehicle will find it that there could be a snapback in demand at some point in time. So I think there's one big distinction happening there. The second is that in March, there was a point where the global markets and economy was staring into the abyss. There's been very strong action by the US Fed and some action by the Reserve Bank here as well, and globally. And I think that's put a floor. So I also believe that the March lows that we saw globally likely hold and will unlikely be taken out.
Right. Okay, fair enough. So going forward then, what's the strategy that you would advise looking at this point of time? Where are valuations comfortable? Or would you look perhaps more, as you said, on really simply the specific companies or sectors that have opportunity to grow?
Well, I think it always makes sense to only look at specific companies within specific sectors that have long duration growth. And I think the areas to focus there would really be companies that are high quality. What we'll see come out post-COVID is that the strong will get stronger. And that's going to be true for a lot of companies in India, where the leaders, the number one, number two player, will become much stronger relative to everything else in that particular sector. Just imagine in an area like financial services today, when the leading private sector bank has a great balance sheet, has technology leadership, has cost of funds at 3% or 3.5%. Imagine being a bank or a NBFC, with cost of funds, even if you had access to it at 7, 8% and competing. So it's going to play like this across different sectors. If you look at auto, there's a largest tractor company in India that makes cars. There's a commercial vehicle company in India that makes cars, and they've been losing money for a long time. And I think many of them will start pulling the plug. So this trend is to look individually at companies, to look at the leaders, look at their balance sheets. And if the sector is attractive, it's quite likely the leaders get stronger.
Fair enough. Shiv, hi there. Good morning. Wanted to get in your take as to what the stance is when it comes to the opportunity as well as the valuations within the broader universe, the mid and the small caps. Do you think that after that spout of underperformance that now that a lot of potential lies here, or are you looking at this space, as you said very selectively just a short while ago, that those companies that are strong will continue to build on their strengths and only become stronger? Is that the view that you have within the broader universe too?
I think the broader universe of mid-cap companies remains challenged, even pre-COVID, for a number of years. If you look at a lot of mid-cap companies, they've done well in spurts. For a couple of years, earnings go up, stock prices go up. But if you look at it over 5 or 10-year periods, very few of them actually graduate into being a large cap or a successful company. And I think that challenge has only gotten more during the COVID period and the post-COVID period. A lot of them are unable to compete, whether it's on cost of capital, scale, now technology, And as a result, I think one has to be very discerning in that space. There are going to be even fewer winners in that space, I think, on the long term. And this we're seeing happen globally, not just in India.
The stance when it comes to some of those consumer-driven sectors, how are you looking at the FMCG basket or even autos, given the kind of mild recovery that we did witness in the auto sales numbers just yesterday? Is there a lot more pain in store, or are you seeing signs of things picking up and improving?
I think the near term is extremely uncertain, and the reason for that is, I think, two. One is there is a lot of psychological pain in everybody's mind. It's been a tough 4 or 5 months for everybody. And it's not really the time where people are very excited to go and buy things. But the important thing to realize is that fundamentally, demand has not been destroyed in the products that you mentioned, in automotive, for example, in India. In the US or in Japan or any of the developed countries, no matter what you do, you can't get demand to be more than 2% or even less. And that's just because they're fundamentally saturated markets. India is fundamentally not a saturated market. So demand will come back, but the next 3 to 6 months do look extremely uncertain. In addition, execution is a bit of a challenge, where meeting supply, having a factory run, having the component vendors supply you is extremely challenging. Your distributors are not open, your outlets are not open. But having said that, I think the post 6 months from now, I think demand comes back, and a lot of companies should be prepared for a snapback, possibly in demand.
Sure. Where will recovery kick in the fastest then, Shiv? Because what one has also seen in the last 3 months is that there has been a tactical shift in the sectors which are leading. I mean, besides the last 1 month, it's not been about banks. It's been about Reliance doing all the heavy lifting. Bharti has come to the fore. You've seen a resurgence in pharmaceuticals. So in that sense, there's been a shift of leadership, if I can call it that. Do you think that, this leadership is here to stay? There will be newer sectors which will actually take the markets higher from here, and recovery will come in faster in those?
It's interesting. I've been hearing about leadership changes in global markets for probably 15 years. The technology stocks in the US 10 years ago, there was supposed to be a leadership change, and then 5 years ago, and then now, we're not seeing any of that happen. I think this tends to be a little bit more macro analyst forecast rather than the realities on the ground. I still see financial services, especially private sector, high quality companies, in fact, specifically those, to be the clear winners going forward. Financial services is the heartbeat of any economy, and certainly for any emerging market economy. We can have leadership change for months or weeks, but I think over the next 3 to 5 years, you're going to have these financial services company do extremely well, especially because there's going to be limited competition. There are only 2 or 3 high quality banks and maybe 2 NBFCs that are really strong and will emerge stronger at the expense of others.
Fair point. The other trend which is also emerging, Shiv, and we were chatting about that just yesterday when you had the monthly auto sales data come in, that, it's more and more convincing that perhaps in the near term at least, it's the rural markets which are going to lead the recovery, be it the FMCG data that one is gathering, be it construction activity, or for that matter, even the tractor sales, for other reasons, beyond just the fact that the rural India has been a little, in that sense, better off when it comes to the COVID infection. But do you believe there are investment opportunities here, be it tractor companies, be it some of the FMCG, rural-dominated themes?
Yeah, I think a lot of businesses that have a large rural exposure, whether it's two-wheelers, autos, FMCG, are seeing, less demand fall off in the rural parts of the country because of COVID. And that is something that will probably and hopefully sustain. But I don't think that there is anything specifically that one would just do because the rural economy is doing all right. I think the urban economy and the semi-rural economy are also pretty big. And so for companies to really come out of this profit slump, you need to see all of that come together.
So net Shiv, what you're saying is stick with the leaders and you're not going to go wrong?
Net, I'm saying there's fundamentally two decisions to make. Number one, will the company survive? And number two, if it survives, will it emerge stronger or weaker? And in my view, the leaders in the sectors that have the most attractive long-term tailwinds are going to survive and emerge significantly stronger. And so therefore, I feel those are the best opportunities going forward.
Anything that you would want to avoid at this juncture? In the last 3 months, all of us have gone back to the drawing board and have had sort of a rethink on our investment strategies. Any sectors that you would want to stay away from at this juncture?
Well, I think fundamentally we've stayed away from any sector that requires significant capital outlay with the promise of return or profits, down the line. I think that's a very difficult model, and I'm not seeing any of that change in this environment. So I think this is an area that covers a lot of sectors that are in the manufacturing space, perhaps in the infrastructure space, etc. And I think it's probably advisable to avoid that. The second thing to keep in mind is to avoid sectors where technology disruption is rapidly endangering their business model. And there are many examples of that, whether it's in retail or in certain manufactured products, where they won't have that level of dominance that they once had in the past going forward.
Sure. Shiv, what could really challenge this 37% recovery that the Nifty has seen since March 22nd? Or for that matter, across the globe, one has seen a stunning recovery from the March lows. I know that markets don't react to the same incident twice, and I know there are the lingering fears of a second wave of the COVID virus as well emerging. But what, according to you, could really stall the markets from here? And is there a fear that maybe we could get back to March lows, or at least close enough?
Yes, it is possible. I think the biggest thing that could happen would be, seeing the results that come out in July across the world. These numbers are not going to be pretty for many, many companies. The second is that, any CEO I talk to, if he's being honest, is saying that I have no idea what's going to happen in the next 6 months. I cannot give you, there is just no visibility in too many different variables. So that is, so we're flying here in the most uncertain of times, which means that the number of variables that could go wrong are quite more than they have been in the past. But I think that the biggest challenge near term would be the earnings numbers that come out starting in a few weeks.
Okay, Shiv, in terms of PSUs as well, I was asking you about those because we've seen such a push towards reforms in certain segments, and we've seen that anticipation build on some of the stocks in terms of stock price. Looking at a Coal India, BHEL, pardon me, some of the other names as well in the space. Does the call for reforms inspire you at all to kind of get into this space? And if so, which particular pocket, where would you feel that it's still relatively, it relatively makes sense to go after a PSU?
The simple answer is not no. And it would, I think the change for some of these businesses, if at all they have a strong business model to begin with, is going to take a very, very long time. And I think for most foreign investors, they would rather wait to see the change before anticipating it. I've been saying for the last 5 or 6 years that, the state-run banks are going to remain challenged even if they get capital flows. There are a lot of structural issues that need to be fixed. And that, I think, is continuing the challenges for them continue going forward. I don't see any significant change happening there for the positive.
Okay, so definitely not seeing too much happening there. And what about cyclicals as well as a pocket or as a theme? Would you play on the cyclical recovery, particularly deep cyclicals, or would you stay away from that for now, focus more on consumption, new leadership names like pharma?
So again, in cyclicals, one could say financial services is cyclical. And I think that's an area where the high quality financials will do really well. It's amazing how the narrative has changed in the last 6 months from, long-term underpenetration, market share shift from public banks to private, and this long runway for growth to only focusing on NPAs and near-term unknowns. So I'd say that's a cyclical, and that's also an industry that has a long runway for growth. Some of the other deep cyclicals, if you're talking about on the manufacturing side, one is that one has to see how the market evolves. I mean, there are a lot of manufactured products that don't just offer that return on capital that justified their business even when the economy was doing well. So I'm really not sure how they sort of do well over the next few years.
Shiv, wanted to get in your take. I wonder if you're looking at this, theme play out, the Atmanirbhar Bharat, the sort of self-reliance on a lot of companies. And, there is a lot of opportunity within a number of sectors. Is there, any follow through according to you with this theme, this potential to really build on the lost opportunity for China?
Really hope so. But the key out here is for it to be competitive. We cannot have a self-reliance if the product costs 50% higher than what it would if it was imported. I think that disturbs the economics across the economy very dramatically. So I think it's a great initiative, but we must remember that we have to do the necessary policy and reforms associated with it to have a world-class competitive product. And I think in that scenario, it would be great.
All right, Shiv, it's been a pleasure chatting with you. Thank you so much for taking time out and really giving us your in-depth analysis as to how you're reading into the liquidity situation, opportunity for India, as well as individual sectors.
Thank you.